good news for anyone planning to buy gold soon, because something very interesting is happening in the market right now that Luna thinks most people still haven't fully understood yet. And honestly, the last reason may end up being the biggest opportunity of all. If you enjoy deep market analysis like this, make sure to follow the channel and leave a comment below because Luna always loves hearing what other people are seeing in this market. Now, here's what Luna is watching. The first piece of good news is that gold is no longer moving higher in a straight line. A lot of people think that's bearish. Luna thinks that's healthy. Because when an asset goes straight up without stopping, it usually attracts too much speculation. The strongest bull markets often need corrections. They need moments where people become nervous again. And that's exactly what we've seen recently. Gold pulled back after rising bond yields, stronger dollar moves, and renewed concerns that inflation could stay higher for longer because of rising oil prices and growing tensions in the Middle East. Suddenly, people started asking the same question again. Is the gold rally over? But here's the interesting part. Even while prices became more volatile, the biggest long-term drivers behind gold never actually disappeared. Central banks are still buying, ETF investors are still coming back, debt is still growing, geopolitical risk is still everywhere. And that's where the second piece of good news comes in. The buyers supporting gold today are very different from the buyers we saw a few years ago. According to the World Gold Council, central banks bought another 244 tons of gold just in the first quarter of 2026, even after prices reached record levels. Think about that for a second. Most retail investors become hesitant when prices hit all-time highs. Yet some of the largest institutions on Earth continue adding gold to reserves anyway. Why? Because they're not thinking about next week, they're thinking about the next decade. They're thinking about reserve diversification, geopolitical uncertainty, and what happens if confidence in currencies weakens over time. And now here's the third piece of good news that almost nobody is talking about. Investment demand is quietly returning. For years, many Western investors were pulling money out of gold ETFs, but that trend has started changing. Gold-backed ETFs globally continued seeing inflows this year, while investment firms like JP Morgan, UBS, and Deutsche Bank all continue publishing bullish long-term outlooks on gold. Some forecasts are now talking about 4,500, 5,000, or even higher over the next few years if central bank demand and ETF flows remain strong. Now, Luna isn't saying those numbers have to happen. Nobody knows the future. But what matters is that some of the biggest financial institutions in the world are not looking at gold and saying it's finished. They're looking at gold and saying the structural story remains intact. But now let's get to what Luna believes is the biggest piece of good news. And honestly, it's not really about gold at all. It's about debt. The United States has now crossed $36 trillion in national debt. Interest payments alone have become one of the fastest growing expenses in the federal budget. Many major economies around the world are facing similar pressures. And this creates a problem nobody really likes talking about. Because when debt becomes too large, governments eventually face difficult choices: raise taxes, borrow even more, cut spending, allow higher inflation, print more money. None of those options are painless. Ray Dalio has warned about this for years. Not because he loves gold, but because history repeatedly shows that debt cycles eventually force monetary systems into uncomfortable territory. And that's where the story changes. Because suddenly gold stops being just another investment. It becomes a hedge against uncertainty. It becomes protection against long-term currency risk. It becomes an asset people turn toward when confidence starts getting weaker. That's why Luna believes many investors are still asking the wrong question. They're asking whether gold is too expensive today. Meanwhile, some of the smartest money in the world is asking whether paper currencies will be stronger or weaker 10 years from now. That's a completely different conversation. And if that conversation becomes more important over the next few years, then the biggest opportunity in gold may not come from fear. It may come from people slowly realizing that the financial system itself is changing. And that's what Luna is watching right now. The real question isn't whether gold moves up or down tomorrow. The real question is whether the reasons people own gold are getting stronger every year. What do you think? Leave a comment below and let Luna and everyone else know.